owner of Credit Fundr. So just to provide some context, you just tell everyone what you do, who you are, and how you found Credit Fundr.
Yeah. So, hey, everybody, my name is Aaron Pursell. I'm out here in San Diego, California. I would definitely consider myself an expert in the credit space, both on the funding and the credit repair side. So, like you mentioned, Credit Fundr is one of my businesses. If you look behind me, this is my new business. It's called Credit Sweepr. So, Credit Fundr is for business funding. That's for entrepreneurs who either need money to start a business or need funding to scale a business. And then Credit Sweepr is a good complement to that business because basically Credit Sweepr is our credit repair agency. So it kind of goes hand in hand, right? A lot of people that want to get funded sometimes, unfortunately, don't have the strongest profile. So, we have everything in-house now, so we can, kind of take them through the whole process of getting their credit fixed, building their profile, so that way they are eligible and qualify for funding. And then ultimately the Credit Fundr, what that is basically we help clients get access to anywhere between $20,000 to $100,000 all at 0% via credit cards. So show them how to leverage their credit and get them into these 0% interest cards that then they can use for, like I said, either starting a business or scaling a business, and then not having to worry about that interest for 12 to 18 months. I mean, that's huge for any business owner starting off. So, it gives you a good year and a half to have a cushion of, no APR. That way, you can use the capital, get your return on it, and then, hopefully succeed from there.
So Credit Fundr was founded first, and then you found Credit Sweepr, right?
Correct.
So when was Credit Sweepr developed?
Literally within the last month and a half, 2 months. So, the reason why I started Credit Sweepr with my partner was because a lot of the clients that we were getting to Credit Fundr didn't qualify. So essentially, we were just outsourcing all those people to other credit repair agencies and basically, giving them the business to repair the credit, then to bring the client back to us once they're, they can qualify. So we decided it'd be a good option to, like I said, have everything in-house. That way you're still working with the same team from A to Z. And then it's a lot easier for us to be able to really sit with the client and develop their file and work with them one-on-one. And kind of, like I said, take them through the whole process of getting repaired and funding. Obviously, if they don't need the repair, then, that's not necessary. Sometimes we get a good amount of clients who do qualify, they have great scores, and then we can put them right to funding. But it ultimately just depends on what the person's goal is, right? If their goal isn't funding and they just want to get a better credit score to qualify for a better auto loan or mortgage loan, then, then obviously the credit repair agency is there to help them with that.
Something that really interests me is that, your business, or you as an entrepreneur, this business model, I have to say, isn't, credit scores and stuff like that isn't the sexiest thing out there, like compared to, say, like drop shipping or creating your own marketing agency, but it's still a good business model. Now, what made you become interested in credit cards and finances and stuff like?
Well, I would kind of beg to differ with you because, I don't necessarily push that part of credit, but there's a lot of people in this space that do. A lot of good friends of mine that focus more on the lifestyle aspect of credit. So there is like a sexiness to credit, right? If you have good credit. So, with that, you could get into travel rewards and perks and travel hacking and, exotic car hacking. So there is a lot to credit that you can use for more of like the lifestyle type of stuff, right? Whatever it may be, like, if you're flexing or using it for marketing, like it's perfect for that too. So, but what got me into the credit space was, first and foremost, like I've always kind of had that type of information brought up like in my household, like, never really in detail, but, credit was always something that like my dad spoke to me about at a young age, that like it was important, right? He never really explained to me as much like as why, besides like, you can get a good loan, whether for like home and auto. But I think the difference between me is, there's a lot of people that grew up in a household where credit is more of like a negative connotation, right? Where maybe that parent had a bad experience and, credit cards are evil and stuff like that. So luckily I didn't come from that type of mindset. So that was already kind of instilled with me. But what really got me to start looking into credit, whether it be for the travel stuff, the funding, and, basically just leveraging it, was prior to this, I was in the medical marijuana industry out here in California. And that was prior to it going fully legal back in 2016. Before that, it was on like the medical side. So it was legal, but it was like a gray area type of thing where, obviously dispensaries and stuff like that existed, but it was in preparation for this new legal infrastructure. So when it did become legal, obviously I was excited. So I was like, all right, cool. Now I can go and apply for a permit, apply for all this, and go through that process, right? Well, within going through that process, every city in California had a different law on how those type of businesses could operate. And what that did was really inflate the price of being able to participate in that market. So what I mean by that was, the permits started, going up for bid. People were buying them, people were reselling them. There's only certain parts of the city where you can actually rent, as far as like different zoning laws. And that obviously increased the value of those places that were eligible, right? So, it went from being something that was possible to being something to me like financially like impossible. I'm like, damn, I got to get an investor who's willing to invest millions of dollars into this. So essentially, once that change happened, it kind of pushed me out of the market because I wasn't able to afford to participate anymore. So once that happened, obviously, then I'm like, okay, I got to figure something else out. I got to be, move on to the next thing or figure out the next business. And that's when I started looking at credit. It wasn't necessarily funding to begin with, but I had another business opportunity that was presented in front of me, and it was a $20,000 investment. And I was trying to figure out a way where I could invest into that business without using my own capital, right? Without using my own money that I had saved up. So I discovered funding. I discovered, hey, well, you can get credit cards that offer 0% for 12 to 18 months. So, if that 20K investment can break even within a year and a half, then essentially you were able to borrow that money for free, right? So that's how I discovered it. Was actually investing into something completely different and using my own credit as, the means to be able to invest into that. And then once I saw that there was a huge need for this in the market, there's a lot of people who want to become entrepreneurs, but don't have the money, right? That's the thing. That's a common thing that a lot of people face all the time is they have these ideas that they want to, create and start on. But the first thing in their mind is like, shit, I don't have the money to be able to start that up. Maybe they have a job or maybe they have other responsibilities and maybe they don't have, $10,000 or $20,000 saved up. Maybe they're living paycheck to paycheck. Well, what can they do? So you have good credit, and you can use that to leverage into 0% interest funding for your business, or you can use that to leverage into travel hacking and stuff like that. And there's a bunch of different ways you can make money through credit, right? Whether it be education, fixing credit, stuff like that. So that's really how I kind of even got in this space. It was really random.
I feel like, entrepreneurs nowadays, either they're drop shipping. Of course, you can create those businesses under maybe $200, but if say you want to have like your own startup or your own brick and mortar, if you have like your own Kickstarter campaign, you need an initial capital because once the ball gets rolling, you have all these manufacturing costs and, a lot of these things add up and you need a couple of $1,000s and, not all these people have that sort of fund. So it's important to have what you have, to have that credit where you have no APR, no interest fee. So in the long run, for any small business owner, that's really important. But let me get this straight. So Credit Fundr is for small businesses. So for 12 to 18 months, they don't get any interest, right? But for Credit Sweepr, is it for like the individual, for the person?
Yeah, exactly.
Okay,
it's for the individual. So, that just depends on their goal, right? If they end up wanting to do funding, then we have an outlet for that. If they just want to get their credit fixed, that way they can get a better interest rate on a car, I mean, that's great, right? So we help them out with that. So, like I said, they go hand in hand. You got to have good credit to be able to leverage yourself either into funding or whether into like, a car or a house. I mean, it's important, and I think it's just something that's not really stressed on enough growing up. We don't learn it in school or anything, right? So unfortunately, a lot of times we have to learn by experience. And for a lot of people, those weren't good experiences, so.
Yeah. So you said you took $20,000, you took the loan and, it was a free way to borrow money, right?
Right.
And then you got into Credit Fundr with your business partner. Now, whose idea was it initially to start this business? Was it you?
Right. Yeah. So originally Credit Fundr, so I have two different partners. I have one partner for Credit Fundr and I have another partner for Credit Sweepr.
Okay.
I originally started Credit Fundr by myself. I was doing business by myself for, I don't know, 6 to 8 months or so prior to getting involved with my business partner. And yeah, once we got involved with each other, I mean, things kind of opened up. He has a huge influence in the business, in the credit space. If anybody knows Sean Sharma, That's my business partner for Credit Fundr. So yeah, he's definitely helped take this idea and this company to the next level just by just being involved and kind of bringing some of his expertise to the table and really opening up his network to the company.
Yeah. And how do you, for your business model, how do you generate revenue? So is it affiliate
Yeah.
marketing, affiliate links where, you're kind of linked with another loan or borrower, and whenever someone, subscribes or signs up for this credit, you kind of get a commission? Is it based off that, or is there other ways
No,
that you
no,
try
no.
to?
Yeah, no, that's a good question. So the way that we generate revenue is through a procurement fee. So essentially, when we are getting the funding for you, we're not necessarily just shipping you off or outsourcing you to a different company, right?
Okay.
We are actually doing the underwriting. We are doing the applications, helping you with applications for these banks or credit unions, whatever lender that we're targeting. So let's say, you wanted to get funded, right? And let's say you
Mm-hmm.
had a great credit score, and I said, hey, I think I can get you $50,000. Well, let's say we get you the 50,000. Let's say we get you 10 cards, from Chase, Amex, Discover, Bank of America, Wells Fargo. We get you 5 cards that have $10,000 each on them, right? Totaling a lump sum of $50,000. What we do is we don't charge anything up front for it. Basically we're working for free up until the end when we actually get you approved for these cards. And then after everything's been said and done, you've gotten approved, you've gotten the cards in the mail. That's when we invoice a 10% performance fee. So we take a 10% performance fee of the total amount that we procure for the client.
Oh, wow. I feel like that's a lot of logistics, a lot of paperwork that you have to go through. Right.
I mean, yeah, it is. I mean, it's definitely something that we've obviously had a good amount of experience in. So it's we're a lot quicker than I was when I first started out doing this. But yeah, I mean, mostly the legwork is really just the vetting of the client, right? Like getting all the proper documents in place, whether it be income verification or whether it's just mostly just looking at the person's profile and figuring out what type of lenders or banks that they're already working with and have relationships with, leveraging those, and then also seeing who they're not with, right? So if I'm looking at your profile and I see that, all right, you have an Amex card, but you're not with Chase or Bank of America or any of these other big guys, then we may put you in front of their doorstep. Or depending on the region that you live in, or where you're at business-wise or income-wise, we have a bunch of different smaller credit unions that we can put you in front of as well. So essentially, we're just looking at your file and trying to put you in the best place possible to get that approval. So that way that person has, the capital that they need to be able to go do what they need to do with it for their business.
Yeah. So I kind of want to go some of the 101 basis of, credit scores and credit cards and whatnot. So you already went over that. If you want to start a business and you need tens of thousands of dollars and you don't have those funds, then it can be really helpful to have a a credit card without any interest fees, right? Now, for the individual, say you're a new college grad or getting into college and you're not sure if you should get a credit card. Now, I guess the first question is there an incentive of getting a credit card rather than just having a debit card?
Yeah, for sure. There's a bunch of incentives. So just off of the credit card alone, you're going to get an incentive for spending on the card, right? So I always tell everybody, never use a debit card. If you're going to spend money and you're going to do it, without cash, digitally, you might as well use a credit card because the credit cards come with reward points, travel points, or some sort of incentive cash back, right? So imagine if you spend $1,000 a month on your normal, monthly bills or whatever, your overhead, right? Whether that's groceries, your car payment, your rent, your utility bills, your phone bills, whatever. Maybe $1,000 is actually really, really low. Let's say you spend like $3,000, right? Something more realistic. Well, if you're spending that on a debit card, you're not getting anything in return for that $3,000 that you spent, right? If you use it on a credit card, imagine if that credit card has a 2% cash back offer, right? You're going to get $60 for that $3,000 that you spent on a monthly basis. It's not really a whole lot, $60, but if you do that every month for a year, I mean, that's some decent money that you're just getting back just for what you're already spending money on, right? So that's one thing, whether that be, like I said, cash back, travel miles, or just reward points. Additionally, you have protection when you use a credit card. So, a lot of these cards have some sort of price protection or protection on the item that you bought. So let's say you went to the Apple store and you bought a MacBook. You use the debit card and something happened to that MacBook, you're kind of SOL, right? You're out of luck. You spent that on a your Amex card or maybe another credit card, if that card has the ability to have some sort of insurance and protection on that item, then, if something happened to it, you could definitely make a claim with that credit card company. And a lot of times they will basically reimburse you for the full amount. So, there's a whole lot of benefits as to why you would use a credit card versus why you would use a debit card.
Yeah, because I have an Amex card, and the only reason why I have it was because my brother told me to get it, and he said, "Yeah, dude, like just use it for everything you have, like spend whatever you have with the credit card, right? And then at the end of the month, make sure you pay it, because if you don't, then you get slapped with the fee, right?" But what about those guys who have multiple credit cards? Is that just the case where if you are spending a lot more money because each credit card has a certain limit that you can spend? I think for me or for Amex, it's like $6,000 or $10,000, something like that.
Right.
So if you're going to spend a lot more, then I guess you do need more credit cards, right?
Yeah. I mean,
Yep.
having more cards isn't a bad thing. I think having the more cards that you have is a good thing, because essentially what you're doing is you're increasing your buying power, right? And
Mm-hmm.
you're also showing other lenders and other banks and credit unions like, hey, I can responsibly handle this amount of credit. So if you look at like my profile, I have over 15 cards. I have over $100,000 cumulative in credit limits. Now, do I use that? No. You know what I mean? I keep my utilization below 10%. But if an opportunity came up and I didn't want to invest my own money, well, I have $100,000 basically in credit sitting with these banks that I could use, right?
Mm-hmm.
And if that $100,000 happened to be 0%, it's like, why would I use my own cash when I can use their money, make something back on it, whether it be reward points, cash back, or travel miles, and then also have the protection with there as well, right? So it's kind of a no-brainer. The more that you learn about credit and the more that you realize how much of a benefit it is to yourself to use credit cards, it kind of becomes addicting on, how you can really use it for your lifestyle. I mean, there's plenty of people that will get credit cards simply just to take advantage of like a sign-up bonus. Do you know what a sign-up bonus is?
I think my brother got the sign-up bonus when he referred me to Amex.
Right. So it could be
Yeah.
like, hey, spend $3,000 in the first 3 months and
Yeah.
we'll give you 100,000 points. Well, that 100,000 points, depending on their point system, that might be worth $1,000. So,
Oh,
use that on
okay.
a
Yeah. Yeah.
flight, use that on a hotel, right? So on top of
Mm-hmm.
that, let's say it also has 0%. So it's like, there's so many incentives to using credit cards. It's crazy if you don't, but obviously a lot of it roots in just having the
Mm-hmm.
knowledge about it. If you don't know, then you don't know, right? So
Yeah.
I think it's one thing that, yeah, like I mentioned, I mean, we're not taught this stuff. So really, you got to either go digging for it or find a mentor or learn from, experiences.
Definitely. I feel in this space of not only personal finances, but credit scores and whatnot, it's not really taught in school. So you do have to self-educate yourself. And credit cards
Definitely.
can be a double-edged sword, because like you said, if you can take advantage of those initiatives, pay every month, make sure you're on top of your credit. But if you just spend wildly and are not responsible with those payments, then you're going to rack up credit card debt, which is arguably the worst debt that you ever want to be in.
Yeah, no, and I think that's an important point that you brought up, right? I think obviously, people in the credit space like myself, like we like to, highlight and glamorize like the positive aspects of credit, because
Mm-hmm.
obviously that's not what most people are taught. But it's also important to realize like, yeah, this stuff can get you in trouble, right? But I think if you have the right discipline, if you have the right budget, and you have the right money management, I mean, it only works to your benefit. So yeah, it's definitely not for people who aren't responsible financially. But if you are responsible financially, then it's definitely something that can change your life,
Mm-hmm.
in a lot of different aspects.
Okay. And how soon should one get a credit card?
I would
Like
say as soon
how?
as possible. Yeah, as soon as possible. If you're 18 years old and you're watching this, or if you're in your early 20s, or shit, if you don't even have a credit card and you're, in your late 20s or early 30s, you should get a credit card. I think, if you are of that younger generation, like 18 to 20, you're in a position where you want to start building, right? I think a lot of clients, or a lot of people that, reach out to me are, younger, right? They're, I'd say 18 to 23. And it's a conversation that I have with a lot of people, just kind of, allowing them to know like, hey, this type of thing builds, this type of thing takes time to build, right? It's not like, hey, I can turn 18 and I can get $50,000 worth of credit cards right now. No, you got to turn 18. You got to, start off with your first card. Maybe it's a secured card. Maybe your parents added you as an authorized user to their account, and that's reflecting on your profile. So there's definitely ways to kind of jumpstart the process, but I think it's important to start off early. The earlier you start off, you're only going to get more of that buying power through credit as you get older, and as you start making more money, and as you start, getting higher limits on cards.
Okay, so you get more credibility as you make those payments, even when you're 18, such an early age, and as you continue through your mid-20s to your 30s. Now, in terms of credit score, how is that measured? Do you know?
Yeah. Good question. It's measured in a lot of different ways. So I would say the biggest thing is payments. So making sure that you make payments on time, right? It's one of those things where you don't want to necessarily make the minimum payment, but if that's all you can afford, then at least make the payment on time, so that way you're not getting a late payment. If you just have one late payment on your score, out of all the hundreds of on-time payments that you have that one 30-day late payment, that can definitely hurt your score. Obviously, the more on-time payments you have, it's going to be weighed less, but late payments or making payments on time is definitely one of the biggest aspects. Another big aspect is your utilization. Utilization is basically how much of that credit limit you're spending versus the amount that you can in total, right? So kind of the magic number in the industry is 30% or less. So let's say you had a $10,000 card, you never want to have more than $3,000 reported on that card. And when I say reported, that doesn't mean you can't spend more than $3,000, right? I think one thing that people fail to or understand or even know is the way that the statements work on credit cards is, if I have a zero balance and it's reported, I could spend $10,000 on that card in a month. If I pay that $10,000 off before the next statement closes, then that $10,000 won't report to the credit bureau, right? Mm-hmm. So as long as it reports, it's 30% or less, that's going to be a huge thing for your score. Obviously, if you can get lower than 30%, like in sub 10%, then that's going to be even better. But yeah, a lot of reasons why people have lower credit scores is because they may be maxed out on a card. That's going to hurt your score a lot, especially if you don't have high limits. If you only have $1,000 limit, then maybe you spend $800 in that month and you don't pay the whole thing off. $800 isn't a lot of debt, right? But it's 80% of that card, which is huge. So that's the main thing. So yeah, late payments or making payments on time, utilization, age. So that's one thing. That's the reason I was stressing, if you can get a credit card at 18, do it, because the longer you have that card and the longer you have that card and the more time that card has to mature, the heavier weight that has on your profile. And it looks better as a borrower too when you're applying for, another card, right? Mm-hmm. If I see your file and you only have one card and it's only been open for 6 months, it's like, I really don't have a whole lot to base your financial responsibility off of, right? Versus let's say, you got a card at 18 and now you're 28. Well, that card has 10 years worth of payment history, 10 years worth of good standing. And, that can definitely kind of sway their decision on whether or not they want to accept you for that card that you're applying for, right?
Yeah.
So that's another thing is age. Age is a huge part of the business. Credit mix. Credit mix is essentially the different types of loan products that you've had. So someone that has had a personal loan, someone that has had a credit card, someone that's had a mortgage loan, someone that's had an auto loan, and they've all, they've made those payments on time and those things are all paid off, or even if they're currently financing those, that person's going to have a better credit mix than someone who's only had auto loans and never had a credit card, or vice versa, someone that has only had credit cards versus an auto loan. So having that mix of the different types of borrowing actually looks good on your file. And I think that's another misconception that people have, is that, it's bad to use your credit, or, you look like you're risky if you're using your credit a lot. That's not the case. It actually shows that you're more responsible. If you can use all these different types of financing products and borrow money, but show that you've always been able to make those payments on time and pay that off in a timely manner, then that actually goes further to the banks than you not participating at all. If you don't participate, then they don't know how to evaluate you, right?
True.
So, and then also recency of accounts. So that could be like inquiries. Inquiries play a huge thing too, right? So if you have a bunch of inquiries on your account and you try to apply for another lending product, especially like credit cards, they'll deny you just based off the fact that you have a bunch of inquiries on your account. Because the way it looks is, if you have, let's say, 10 plus inquiries on your account, it looks like you're seeking credit, right? So at that point you look riskier. So all those things have a, you know, different calculations of how it affects your FICO score.
Mm-hmm.
But those all go into to play when, you know, they're evaluating your score.
Okay. And besides helping people or small business owners get this money, you also do one-on-one consultations, right?
Yeah, I honestly don't do that as much for kind of like if you're referring to like more of like a mentorship type of thing. That's not necessarily something that I have started just yet. So I mean, most of the conversations I have are in regards to credit Fundr, whether it be the funding or credit
Okay.
sweeper being the repair.
Okay.
That may be something that I might open up in the future just to kind of, you know, teach someone A through Z. But as of now, I'm not offering that yet.
Yeah, because I feel a lot of this information could be overwhelming. People don't like
Oh,
numbers, they don't like finances and whatnot. So it
yeah.
could be overwhelming. But kind of transitioning this convo from like, you know, the tactics or the know-how of credit scores and credit cards. Now, in your business, now for with Credit Fundr at least, it was a lot of B2B, right? So you had to maybe go to small business owners because they need that money, that large initial capital. How did you sort of market yourself, your brand, to have business with those small business owners? Because I know on your Instagram, you have a bunch of cool content and maybe you get a lot of indirect sales or indirect clients coming to you. But is
Right.
there a way that, like a strategy that you have where you get, you know, in front of business owners, B2B, maybe use Facebook
Yeah.
ads? Like what strategies do you implement to get
It's a
business?
good, I would say our biggest advantage is affiliates. So for
Okay.
me, right, we do funding. So the best way to be able to find funding clients is to find businesses who sell high ticket offers to their clients who need funding, right?
Okay.
So you kept mentioning e-commerce. So, you know, I'm sure you've heard of like Amazon automation, right? We
Yeah.
have a couple different partners in the Amazon automation field because, you know, their buy-ins are what, usually anywhere between 20 to $40,000, right? It ranges depending on the service that you go to. So if you have someone who wants to invest into Amazon automation or maybe some other type of, you know, automation franchisable type of business, well, if that person is interested and they don't have the capital to buy it just themselves, then I team up with those companies and I give them an affiliate commission and they bring me the client, I get them funding, and then it's a win-win. I'm able to, you know, obviously get a client funded, we make money that way, and then whoever the affiliate is, now their client has the capital to be able to invest in their product or service, right? And then we
Mm-hmm.
give them a little kickback on the back end because they brought us that client as well. So
Yeah.
I would say that is the number one, you know, money generator for us, is just the relationships that we have with other partners of ours who sell high ticket services or products.
Okay. So besides you, the business partner, and the affiliates, what is your main responsibility in the business?
It's pretty much overseeing all the operations of it. So a lot of times I am the one talking to the clients myself. I'm doing the funding aspect myself as far as the underwriting or the applications. I essentially, you know, handle that whole client onboarding part. So, you know, once a client comes to us, I get them pre-qualified, look at their score, make sure that they are eligible and we can actually take them on as a client. And then from that point, we take them through the whole process, get them the funding, you know, make sure that we try to get them either their goal or over their goal as close as possible. And then once that's done, I mean, it's essentially a pretty quick and simple process. I would say typically from A through Z, if someone comes to us and they qualify out the gate, it shouldn't take longer than 10 to 14 days from the time that they have, you know, that capital in their hand.
Okay. So you guys don't run any sort of Google ads, Facebook ads to business owners of some sort?
Not as of yet,
No.
honestly, not
Okay.
as of
Wow.
yet. Yeah. Yeah.
Okay.
Majority of it is just from social media and affiliate marketing.
Hmm. How do you even set up an affiliate marketing system? You know, I see a bunch of, you know, going back to you said you should try to start like a marijuana business back in California. I know CBD is really hot right now, and sometimes I see people trying to sell other people's CBD products through affiliate links, right?
Right.
How do you even set up an affiliate system within your, say, e-commerce shop, within your business? Like, is there some sort of tool that you use or what?
Yeah, you can find like an affiliate CRM, right? So
Okay.
there's affiliate marketing CRMs where essentially they'll allow you to create customizable links for your affiliates. So, you
Mm-hmm.
know, let's say you wanted to become an affiliate of Credit Fundr. I would give you a link, and it's going to be specifically, you know, your referral link, right? So that way, if someone were to click on that link and book a call with me, then it goes into our CRM and our back office. And then I know that that client's coming from you. And then if that client converts into a sale, then I know that I owe you a percentage of that sale for affiliate commission. So
Okay.
it's pretty simple. You know what I mean? It's not that difficult. I would say the biggest thing is just making sure your affiliates are trained on what to look for in your ideal client, right? So if that's the case, and they can keep on pumping those, you know, those leads for you and bringing you people who want either their product or service. Maybe they're just affiliate marketers and they, you know, maybe they're making an affiliate fee off of the other service, right?
Mm-hmm.
It just kind of depends. But at the end of the day, I mean, yeah, that brings in a lot of business, and we like those too because a lot of times those are more warm leads. They've already been, you know, speaking to somebody. That person may have kind of given them a quick little brief rundown of how our service works. So when they come to us, you know, first and foremost, they want the funding because they want whatever that funding is going to provide, whether they're buying, you know, an automation service or whether maybe they just need the funding to, you know, finance their own business, right?
Yeah.
So that's the cool thing with funding is, you know, it's not necessarily a hard sell because people want the capital. And then, yeah, that's basically it.
And so when you first started your businesses, what was the hardest step? Was it the logistical part of all the paperwork or finding your clients? Like, what was the most challenging aspect of starting your business?
I think for me, even to this day, is just trying to figure out ways to improvise and automate the actual process, right? I
Mm-hmm.
think, you know, like more like the internal type of stuff. And that's still stuff that I'm working on and I'm learning new things every day. But, you know, it can be definitely difficult for someone, especially if they're doing this by themselves, just to stay organized and have that steady sales process and workflow. But that's always been my biggest challenge is really on the scaling side and like delegating and like, you know, allowing other bits and pieces of the business to be able to be operated by other people. I've always been in business myself by myself. So that's, you know, one of the reasons why I'm grateful that, you know, I have both my partners in the funding and the repair side is it allows me to not have all the, either the pressure or the workload on my own. And, you know, everyone has different skill sets and, you know, attributes that others don't, you know, and it complements each other. So I would say that's probably the biggest thing is just automating the workflow and making things as efficient as possible. So that way it's a smoother transition from lead to client to sale.
Yeah. So do you recommend for any entrepreneur to, I mean, if they're working by themselves right now, to eventually get that first hire or maybe get, say, a freelancer or a virtual assistant to kind of do some really more tedious tasks so they can save more time throughout the day?
100%, 100%. Those are the tasks that I hate doing the most. And I feel like if there's tasks that you aren't happy doing just because they're tedious or monotonous type of like work, then yeah, outsource that. Because the sooner that you can get those little things off your plate, the more time you have to focus on the things that are important, like, you know, either doing content or marketing or actually have an opportunity to, you know, be on the phone, be on the calls with the clients and give them your all versus having to worry about, okay, I gotta, you know, send this little email out or, you know, all those things can be automated. So I think that's one of the biggest things is, you know, just learning those things because it's not, it changes all the time as far as how to make things efficient. But I feel like that's really the only way to scale online is to be able to just create the most seamless workflow.
Mm-hmm. Now, talking about the content that you put on Instagram, more specifically IGTV, that information itself can be, I feel like other companies, other people can really monetize that information, right? Either through a
Right.
consultation or a program course, but you're giving out that information for free now, right?
Right.
Is that one of the big strategies that you have as well of maybe getting indirect clients and whatnot, or you just
Yeah.
want to grow your brand because you have a really big brand, or, you know, it's really professional, like your website, the way you format your content as well, the intro, outro, it looks very, very professional, and you have a well-rounded brand, which I think is important nowadays.
Yeah, I appreciate it. That's a great point because that wasn't intentional, right? As far as giving away information that I could probably put into a course or monetize off of. I think, you know, I think for me, just naturally, these are things that I know and I want to share. And I think the hard part that I always fail to realize is like a lot of this information just isn't even something that like people think of or know, right? It's not like common information. It's common for me, but for a lot of people, it could be like groundbreaking. So I think it is definitely something that's worked out to my benefit on giving information that other people probably would have charged for. And I think that's the biggest thing, is ultimately just providing as much value as you can, right? Not everything has to have a dollar figure as far as like the information that people are seeking, right? Now, if everything's formulated in, an A through Z type of thing, and, there's a whole curriculum, then yes, I think that, whoever's selling that information does deserve to be able to monetize off of that, because credit is one of those things where everything's out there as far as the information, but it can make you kind of crazy if you are trying to just figure everything out by yourself, right? Because there's no direction, there's no formula to it. It's just kind of like, all right, learn this thing, learn this thing, learn this thing. But if someone is able to put it together piece by piece, puzzle by puzzle, in a really straightforward way, then yeah, definitely monetize off that stuff. But I usually just like to throw little gems out there for free, and obviously it's good content, and it's value to the client, and hopefully maybe it sparks an idea or something in someone's head and they can make some money off of it. So
for sure, yeah. Now, during COVID, has there been a decline in people looking for money to start businesses?
No, it's actually been an increase.
Really?
Yeah, I would say it's been an increase. The other side of that is there's been an increase in people who want the capital, right? Who want the funding. Maybe they lost their job and they want to start a business, or maybe they lost their job and they've always wanted to start a business, but this job has always been kind of in the back of their head, and now they're forced to make a change, right? Which is kind of cool to see. But I would say the amount of people that want it has increased, but it's gotten harder to get. And I'm sure a lot of people out there, maybe other funding people won't admit this, but it's definitely changed lending. The banks are looking for a lot more verifiable information now. I mean, back, Q1, beginning of the year, banks weren't really asking for documentation, whether it be income or anything like that. They could they're going off of whatever you put on the profile. And a lot of banks are still like that. But with a lot of these other smaller credit unions or, other lenders that we work with, I mean, they're now verifying this information, because I'm sure there's a lot of people out there who initially, when COVID first happened, probably were applying for loans, right? Maybe they were doing it because they needed it, and they were already paycheck to paycheck. Their hours got cut. They couldn't work because of COVID, whatever the reason may be. So I'm sure the amount of money that people were after went up, but that also made it more, the industry kind of tightened up and got a little more strict on the availability of it, right? So it's kind of like a catch-22.
Yeah. Wait, so if I want to use your service and any of your two services, can anyone be like, are there any constraints? Like, can any 18-year-old, sign up for your service, or are there certain constraints and paperwork that they need? Do they need a credit score? Do they need a full-time job? Like, what prohibits them from?
So for the repair, no. The repair, I mean, obviously, like, if most people that want to do the repair have bad credit, so I guess that would be a qualification for credit repair, is you have bad stuff on there, right? But that can be for anybody. For funding, yes, there is qualifications. So some of the qualifications would be, we want you to have over a 700 FICO score, right? If you're in the 6s, 5s, 4s, then we look at your account, you may need some sort of repair to get you to that 700. So that's the first thing, is 700 FICO. Another thing is we want you to have at least 3 or 4 current credit cards. 3 or 4 credit cards is kind of the minimum for a bank to see that you are experienced in the credit card game or whatever, right? Just having more accounts is shows that you're able to take on that financial responsibility. Another thing, like the utilization that I mentioned, we want you to have under 30% utilization on every single card. So that may be something that we have to work with you on, and calculate the 30%, have you make the payment, and then we have to also wait for that, obviously, to update to the referral, right? So FICO score, the amount of accounts you have, utilization. We want you to have at least 3 or 4 years worth of credit age, right? So that's important. That's why I was stressing, getting credit cards as early as possible in age, so that way you have those accounts that are already mature. And then no derogatories. So and that's where our credit repair comes in. So if someone has a collection, has late payments, has charge-offs, has a bunch of inquiries, maybe they have student loans, bankruptcies, you're not going to qualify, right? So if that person, if they have a good file, but there's only like a couple of those negative items that are really holding them back, then we'll put them through the credit repair process, get those things deleted, and then bring them back. So yeah, I mean, the funding, it's not for everybody, right? As far as not everybody qualifies, and that's kind of I would say that's kind of the hard part, right? Is there's a lot more people that want it than the people that qualify, especially like in our age group, like if you're in your 20s or whatever. But the people that do have the qualifications are the people that are getting the results. So we may talk to 10 people in a day. Maybe 5 of those people don't qualify. Maybe of those 5, 3 sign up for credit repair, and then those other 5 that do qualify, we get them funding. So, and that's kind of why we, I made the 2 businesses so that way they coincide with each other.
Okay. Now, say during the 12 to 18-month period, he or she does not pay back, right? The loan,
right?
The credit card loan. Now, what happens next? Like, has that ever happened to you guys? Does it get messy?
No, not necessarily. I mean, I guess if the client was still, because a lot of times, once we get the client the funding, I mean, they'll follow up with us here and there if they need more funding, but they're not necessarily updating us that they're making the payments, right? We're hoping that obviously they fulfill the requirements of the credit card, but we're not the lender, right? We're essentially just putting them in the right place to get these cards. So, but let's say in this situation, a client that we worked with a year ago came back to us and they say, hey, I put 50,000 on my card and I've only, I still have 20 grand left. What do I do? Right. What we'd probably do is we'd look at different types of cards for them to do a balance transfer. If you don't know what balance transfers are, essentially they still work within that 0%, but credit cards will offer either 0% on purchases or 0% on balance transfers, or sometimes they offer 0% on both. So let's say you had 4 cards and each card has $5,000 left of debt, right? And you're on month 11 and all of them expire as far as the 0 APR in a month. And you're like, damn, what do I do? Still owe 20 grand. It's 0% right now, but after the 0% stops, I'm looking at 20% APR, right? 20 grand, 20% APR, that's a lot. That's a lot of interest on a monthly basis. So if they came back to us and said, hey, we need help, then essentially we'd find them offers that are 0% interest on balance transfers. And a lot of those are also 12 to 18 months. So essentially, you may be able to transfer over that whole 20K to a new set of cards that now has their own 0% APR offer for another year. So now you're deferring that debt over for a whole another year, which then gives you a lot more time to be able to make those payments and get that debt paid off with your business that you already have and not get, drowned by APR. So that's kind of the alternative that we usually offer our clients if they were to come to us in that type of situation.
I think I saw one of your IGTVs, or it was on the car example where you have to pay within 12 months, a year for a $6,000 car loan that you had. But if you have what was the term that you mentioned that where you just pay up front right away? They say 3 to 5% instead of the large 20% of the APR. If you pay up front, you don't have to pay the extra $750 that came on top of the interest. Whereas if you pay right away up front, then you don't have to pay that initial interest or interest from the APR rate.
Exactly. So when you transfer over a balance to a 0% interest balance transfer, obviously that debt is now going from, let's say, 20% APR to 0, right? Within that transaction, obviously the bank that's doing that, they have to make some money because they know, okay, we're going to give this person a whole nother year with no interest. So how are they making money? They charge a balance transfer fee. So usually it's between 3 to 5%. So let's say you were transferring over that 20K from an MX to a Chase card. Well, Chase is going to give you 0% for another 12 months, but they want to make something in return because essentially they're paying MX your debt, right?
Yeah.
So they usually charge 3 to 5% depending on the card. So let's say, 3 to 5% of 20 would be what? Can you do my math here? 600 to $1,000, So you would pay that as opposed to having a $20,000, debt on 20% APR, which is going to cost you a lot more in 12 months than $600 to $1,000 that you'd pay in a transfer fee, right?
Now,
So
besides credit cards and credit scores, are there other personal finances or personal finance terms or teachings that you like to like learn about? Say, for example, like stocks or
yeah, yeah,
IRAs.
definitely. Anything really financial, whether it be trading, day trading. Definitely dived into forex, cryptos, recently some options. So day trading is definitely something that I think is a great uh, tool for anybody. Because the cool thing with day trading is you don't need anybody to make any money, right? You're trading in the markets. Whereas obviously, like what we do, whether it be doing funding or doing repair, like you need a client, right? You need a client to either pay for credit repair. You need a client that qualifies for funding. E-commerce, you need a product and you need a client, you need a customer to buy that product, right? Whereas day trading, it's just you versus the market, right? Which I think is cool because it's one of the only things that you can do pretty much anywhere in the world and not have to interact with anybody. It's kind of a real lonely sport for a lot of people that I know that like are professional traders. So a lot of times those guys spend a lot of their downtime having fun because most of the time they're up late or up early on their computer. So day trading I think is one thing that is useful for anybody, especially just like learning how to read charts. Even if you're
Yeah.
not using it to do day trading, if you know how to read a chart, I mean that's a skill in its own, right? Um, but yeah, day trading for like short term type of stuff, and then long term, I would say, definitely like ETFs or basically ETFs or index funds are basically
Hmm.
some of my favorite type of products, just because I think, especially if the ETF or the index fund is following, let's say like the S&P 500, right? I mean that's a great way of being able to put some money into an account that is historically has gone up 6 to 8% a year, and I mean unless you don't have any faith in America and you think America is going
Hmm.
to crumble, I mean essentially you're betting on our stock market, right? So I think
Yeah.
that's a good easy passive way. As well as one of my other things I'm really interested in is precious metals. So I think that's a good investment thing too, is gold and silver. I've been buying gold and silver since 2017. So, and as of this year, I mean, especially silver shot up a lot over the last couple months with COVID and everything happening. So I think those are some good, assets to look into as well.
Yeah, I spoke to a coin collector not too long ago. He would collect coins, and he said, you're not going to make money flipping coins like that, but you do make a good amount of money specifically through metals, more specifically silver. And he actually bought silver bars instead of like getting it into the actual like stock market. He bought
Yep.
silver bars, and he would just stack them up, and he would save them until. And he did say that they shot up this year. So that's
Yeah.
kind of that's kind of cool.
Yeah, no, yeah. If you are going to look at precious metals, definitely, if you want to just kind of park your money into something, I think that's a good thing to do. And, the cool thing with precious metals is you can get them, they're tangible, right?
Hmm.
Obviously keep them safe, put them in, security deposit box or a safe or whatever. But yeah, you can buy, gold and silver coins or, bars. And obviously, as we've seen this year, gold and silver are definitely both, risen in value. So that's another thing.
Hmm.
um, yeah, I think those are probably one of the best ways to just park your money besides maybe real estate. And then if you want to be a little more risky, then, crypto too. I was huge into crypto back in 2017 when everything was kind of first popping off. So I don't really day trade or, look at crypto charts every day like I used to, but I still hold a good
Yeah.
amount of crypto that I'm just kind of just sitting there and, we'll see what happens with it.
Yeah, I think it's good to have a diverse portfolio. But in terms of your ambitions of what your business for the next 5, 10 years, what's your grand ambition or vision that you have for your two businesses?
Yeah, really, it's just scaling them to the moon, right? I would say with the repair, really helping people change their financial future by helping them get their credit fixed, right? Helping them get their credit fixed and then helping them build their credit back up so that way they can do the things they want to do. I mean, it's crazy when we're talking to clients and something as like simple as like finding an apartment, right? They run your credit when you find when you're trying to rent, right? So that's one thing that I hear all the time is people are like, I want to live in, a nicer neighborhood, but I can't qualify, even though I make I have the income and da 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 da. They're like, I have, evictions on my file, and that's holding me back from moving into this, nice community, right?
Hmm.
So credit repair, just I mean, we want to have, thousands and hundreds of thousands of clients, right? So scaling that, and then with funding, same thing. I mean, if we can do, $10 million worth of funding a month, I mean, that would be insane for us, right? So that's really where I think both of those companies land, is just scaling them as big as possible, and just trying to impact as many people as possible.
Yeah.
And then maybe in the future for myself, maybe coming out with a couple courses or doing a mentorship or something a little bit more personal and one-on-one type of thing. So yeah.
I don't know how close aligned your business is with venture capital, investing in companies, but is that something that's probably maybe tangible, or a far-fetched idea of maybe investing in startups, giving them money once you do reach that point of maybe $100,000, if not millions, where you can invest in these companies and, have a portfolio of them. And if one goes very, very well, of course,
Right.
you get a nice return like those VCs do.
Yeah, no, for sure. I mean, I'm definitely not there yet.
Mm-hmm.
Obviously if it's something like a smaller investment, $50,000 or less, then maybe I could consider it. But yeah, definitely could be something in the future. I think if anything were to be a little bit more aligned with that, it'd probably be more of like actually investing in like, more into the stock market, and doing more of the day trading. That's kind of where I see myself doing a little bit more on the passive side, as the businesses grow and as I can scale them and as we can delegate and automate more, then that'll obviously leave more time for myself to focus on other things. So I would say if there's two things that I would really want to focus on, would be real estate and then, day trading.
Yeah, day trading, like you said, more short term, whereas with your business is more of a long-term play. Of course, real estate, you build your portfolio and have a really diverse portfolio. So
Definitely.
Aaron, I don't want to take too much of your time here. So if people want to learn more about you, learn more about Credit Fundr and any other businesses that you're working on, your projects, like where can they find you?
So the biggest place that you can find me is on Instagram. So my Instagram is at Aaron Pursell. It's just my first and last name and then underscore. If you go on there, you can find basically both my Credit Fundr and Credit Sweepr Instagrams, but that's really where majority of my presence is on Instagram. So, if you want to reach out, feel free to shoot me a DM. Feel free to book a call with me. Anybody that's coming from you, I'd love to talk to you guys and, see if I can help you in any way. Even if it's not for funding or not for repair, there's plenty of people that DM me all the time, just ask me like random questions about credit, and, I'll definitely just shoot out a couple of gems if I can help them. So it doesn't always have to be a transactional thing with me.
Yeah.
That's kind of, I think the thing that I want to kind of preach is like, it's not always have to be some sort of dollar exchanging to get some information. I mean, that's like why you said, when I do make content, when I do make videos, I try to at least give people some information that would probably be, someone else's, and someone else, something else that someone else is selling. Right.
Mm-hmm.
So.
Yeah. Cause I think we all do appreciate this, because a lot of us, especially me, this is very, very foreign and very, very important nowadays, and they don't teach this in school. So for you, it's, it's kind of standard, but for a lot of us, it's like, okay, this is important, but we don't know nothing about it. So it's good that you provide that value on Instagram and whatnot.
Yeah. Thanks, man. Yeah. I think that's another thing that could be possibly, in the future, is trying to figure out a way where, there could be some sort of school education about this. So, I've always thought having some sort of nonprofit would be cool. And I think that's definitely a community that you could impact the most is, people like the younger generation. If there was a credit course in high school,
oh yeah,
I mean, how many people do you think would be in the situation they'd be in now? Probably not a lot, right? Because they learned it as long as they paid attention. But yeah, I think our education definitely needs, our education system definitely needs some change, whether it be just more on the financial side and stuff that actually are like, it's applicable. Like, obviously there's a lot of importance in like learning, science and math and history and stuff like that. But it's also important to know how to, manage your money. And, they don't teach us anything about credit. They don't teach us anything about money. They don't teach us anything about taxes. And those are some of the biggest aspects of, adult life. Right. So I think that's definitely something that, I'd like to impact if possible.
Yeah, that would be so dope. So yeah, bro, I'll definitely put all the your website, your not hashtags, but your Instagram tag on the show notes. So if anyone's interested, they can click on that and hit you up. All right.
Awesome, man.
So Aaron, it was definitely a pleasure, bro. I really do appreciate it.
Definitely. Thank you for having me, man. I appreciate you.
Thanks.